is that people that have assets but don't have a lifetime income benefit don't live as long because their bodies are stressed out, and when your body is in stress, you're more susceptible to diseases like diabetes and all different things. People that have a lifetime income benefit where they're getting a constant income coming in live a more stress-free life. Therefore, they're living longer than people that may be sitting on a pile of money. So I just wanted to add that to you and just tell you, man, you're doing an incredible job. I'm going to shut up. I'm going to mute myself and continue to listen. Okay.
Awesome. Thank you, Joe.
All
Well,
right, buddy.
I'm going to move on to the tip of the week, which is big bait, big fish. Man, this opened up my eyes. Oh my God, this was a game changer for me. You know, I've already identified since I've come back 3 clients this week that I'm working with to either do a rollover for an annuity or possibly do a single premium life insurance, which I'm going to talk about more in detail here in a minute. But I didn't have my eyes open. I wasn't asking the right question. I wasn't looking for the opportunity. And that's what I want to teach you to do now because those are some huge commissions. But big bait, big fish. If you go to a home, I think most people on this call, if you've been working final expense, I think you would agree that most of the homes that we go to are in the quote unquote hood, right? And they're not too nice. The house is in disarray. That's our typical final expense customer, and I'm okay with that. In fact, I've learned to love those customers. I usually get excited when I come up to a house that doesn't look pristine. Um, and I've always kind of steered away from the houses that look really nice. And I drive into a really nice neighborhood, maybe not super expensive, but it's a nice neighborhood. They got nice cars in the driveway. Everything's really nice. I've always like hated those leads. I don't know if anybody out there can relate, but I'm like, oh man, I already know I'm not going to sell final expense on this one. They already have their stuff in order. They already have assets. They have a financial advisor. They probably have $250,000 in life insurance. What am I going to do for this person? Let me tell you what you're going to do for them. Well, if you're in that scenario, right, part of our job is to qualify the customer. And I tell these people, you know what? You may not even need any life insurance. You have to pull out the asset gathering form. Now, if you don't know where to find it, go to the Your Insurance Group website, log into the back end office, go to the annuities tab, and there you will find the asset gathering form. I printed a bunch of those. I have it on my clipboard. I pull it out and I start asking the questions. You have to ask the questions to identify if you can help them with a different solution, or maybe they need final expense. Um, but one of the good questions you can ask is, are you drawing on Social Security? If they've already started Social Security, depending how old they are, you might want to ask, when did you start that? How much are you getting per month? What is your income from Social Security? Uh, do you have a pension or other guaranteed income? That's an important question because maybe they don't have any other guaranteed income. Maybe it's just Social Security. Maybe they do. Maybe they're retired military. How many people would agree that if you go to somebody's house and they're retired military and they have a pension from the military and they have Social Security, that they probably have a really good lifestyle? Well, that's what we want to do for these folks. We want to give them a better lifestyle. Now, you can ask questions like, is your home paid for? Do you have any other beneficiary designated accounts? What do you mean by that, Jimmy? Beneficiary designated accounts. What I mean is, Mr. Customer, if you pass away, do you have another account that when that money will pass on to your beneficiary? Maybe you have a CD, a mutual fund, a 401k, IRA. That's where you ask all those questions. That's where you find the money, right? So when I'm talking to people and they're answering those questions, like I had one guy, he goes, yeah, I got $250,000 right now in mutual funds. And it's doing really well. I don't need insurance. I said, you're absolutely right, sir. You don't need insurance in the traditional sense, but man, I need to show you something that's going to blow you away. And I already have scheduled my follow-up appointment with that person to come back and pitch an annuity. Um, how about this? You want to use some key phrases. Some key phrases that seniors like is guaranteed lifetime income. Another key phrase you want to use is suboptimal portfolio. Maybe they're so proud of their portfolio, they've done well for themselves, they were disciplined. You want to applaud them on that, and you want to tell them, but you don't want to have a suboptimal portfolio. What do you mean by that? Well, what I mean is that it could be better than what it is now. So you want to use information that's going to attract their attention. Some other things that you can talk about to catch these big fish is you can say, you know what, most seniors say that when they retire, they're going to do a lot of traveling, they're going to take a cruise, they're going to buy a boat, they're going to join the country club, but they never do. And why is that? Well, it's because they're too scared to spend their money, because if they overspend, they can run out of it. So they're living in a just in case retirement, just in case, so they don't buy anything. And guess what happens when they pass? They leave that to their kids, and then guess what their kids do? That's right. They travel, they take a cruise, they buy a boat, they join the country club. So those are the things that you need to talk about to get that big fish. You need to grab their attention. Let me tell you something. Retirees do not live on assets. They live on income. Your assets can be lost, they can be stolen, they could be swindled, sued, divorced, or even decimated in a market crash. The ultimate success of your retirement is not about your assets. It's not about your assets. It is not about your assets. It's about income and risk management. So I hope I'm grabbing your attention here. The life expectancy of a 65-year-old male is 85. And for a 65-year-old female, it's 88. But here's an interesting fact: married people live longer than single people. I have no idea why a couple's life expectancy becomes 92, but it is a fact. There is even 24% chance that one of those people is going to live to 97. And some of you listening to my voice may very well live to age 100. So this is why it's so important to have a guaranteed lifetime income. And these are the things that you want to talk about with your client. What are some of the solutions that we offer? We offer annuities, but I guarantee you this, you don't really want to talk about annuities because that has such a bad stigma to it. So just leave that word out of your conversation. You want to talk about guaranteed lifetime income. Another product is single premium life insurance. I have a case in point right now. I met with a lady 2 days ago. She has a beautiful home. Uh, she had nice furnishings. She's getting ready to put a solar panel on her roof. So I mean, the lady's doing fine. She's got Social Security. She has her husband's military retirement pension. He's already passed on. She's doing well. She's already prepaid her funeral in full. She's not worried about final expense. She says, "Oh, I didn't know what this card was. Oh, I thought this was some kind of government funded thing. Oh, I'm sorry, I don't need your services." That's what she told me. She was trying to kick me out of the house. She was 77 years old. I used some of these phrases that I just talked about. I grabbed her attention and I asked her, well, what do you want to leave your kids as a legacy gift? What are you going to leave them? One of the things that we talked about or learned about was doing reverse mortgages, which that's not something that we do, but that's something that a retiree can do to help them sustain longevity of life. She already did the reverse mortgage. I said, so what are you going to leave your children when you pass on? What kind of legacy gift do you have for them? She says, well, I have $30,000 in the bank at Security Service Federal Credit Union. I said, okay. Well, you know what? When you pass away, that $30,000 is going to have to go through probate. You might get assessed some estate taxes. And then when it passes on to your kids, they may have to claim it as income tax. But and she already said, I don't want any payments. She was real big on that. I said, but you know what? We have a product for you that you don't have to make no payments. Rather than leaving it in the bank where it's hardly earning any interest, we can put that into a product that's called a single premium life insurance. And let's look at half of that. So we looked at 15,000. If we put $15,000 in a single premium, I already ran the illustration. Her immediate death benefit is going to be 20,000. In 5 years, it'll grow to 25,000. That's going to pass to her beneficiaries income tax free. It's going to bypass probate, and it's still there if she ever needs to access it. It's all cash value. There's no penalties for accessing it. Who do we do this product with, Jimmy? It's called a surety. And if you were listening to one of the webinars earlier this year when they announced it, you would have known that, right? But it's called a surety. That's one of our carriers. Get contracted with them. And I don't know the exact contract rate. It's going to vary by agent depending on what tier you're on. But you know, even if it's only 8% of 15,000, that's a pretty decent income. That's better than the average final expense plan. This lady's 77 years old. We're going to turn 15 into 20 immediately. On day one, she'll be covered. So those are some of the solutions that we have to offer. Now, something I want to mention to you, and let me check my time here. Oh, good. I got 15 minutes, so I won't take that long, but I do want to talk about something here, is that if you go to Tom Hegna's website and you buy his book, but if you go to his website, he has a DVD that speaks to the client, and it's I think it's a 30-minute, maybe it's a 60-minute DVD, but you know, 60 minutes at worst case scenario. This is what you can do. You can buy that DVD. If you're not 100% sure of your own sales abilities or you know, on the particular topic of annuities, you buy the CD. It's I think it's $30. You put it in a big bucket of popcorn that you buy at the grocery store, that they can pop the popcorn in the microwave and they fill the bucket up. Put a couple of sodas, put some candy in there, put that DVD in that bucket, take it to your prospect's home, tell them we're going to have movie night, right? Set it up, put that in the DVD player, pop the popcorn, sit down with your prospects and watch the video. I guarantee you, by the end of that video, they're going to be so ready to move forward with you. All you're going to have to do is run some illustrations. That deal's in the bag. So buy that DVD, invest in yourself. Let me see here. Get credentials. That's another note I want to say. Something I learned over there at the conference. I've always heard of credentials. I've seen people put it on their business cards. I always thought it was for financial advisors, people that have a license to sell stocks and mutual funds. And guess what? It's not limited to those folks. Myself, I don't have those type of licenses. I'm just like the average agent. I'm licensed for life, health, and fixed annuities, and that's all I have. Well, guess what? I just applied for my first credential to become an RFC, and that stands for Registered Financial Consultant. It's actually registered with FINRA, so this is totally legit. I'm going to put it on my business card, but I'm going to spell it out. I'm not going to just put the initials. And now I'm going to talk, when I'm talking to my clients, I'm going to make that a point that I'm a registered financial consultant, and I have a fiduciary responsibility to you. And so you can make a big thing about that. You're not just a life insurance agent. You can expand your credibility with those folks. By the way, the cost on that is $375. If you're interested, contact Joe or myself. We'll get you the information on it. I did save enough time to talk about one last thing. I don't know if it's gonna go very far with very many people, but man, I believe in swinging for the fence, and this is swinging for the fence right here, what I'm about to tell you. And this is big bait, big fish. Man, how many of you guys might know or have access to somebody that's worth several million? they have to have a minimum of a $5 million, I guess you can say, estate to qualify for this type of product. Minimum 5 million. Most of the people that move forward with this product are worth 10 or even 20 million. Let me tell you, I happen to know a few people that fit this category. I'm gonna swing for the fence. Um, there was a company out there that they promoted that they will capture these people for you, and they will help you hold an event to put this together, and you can sell it to them. But I want to tell you what I'm talking about is something I've never heard of before. It's called premium finance. And man, wouldn't you know it, the super wealthy, they have stuff structured just for them. And let me just tell you in a nutshell what premium finance is. Um, Basically, it's a unique solution, and it's an opportunity for these super wealthy people to purchase life insurance uh, without having to dip into their investments. Maybe they're doing really well in their investments and they don't want to take the cash out to pay for their life insurance. Well, the way it works is the premiums for the insurance policy are paid by a lender, while the policy's cash values are used as collateral. The policy is designed to capitalize on growth between the crediting rate of the high cash value of life insurance and the cost of borrowing. This allows for sufficient cash to build up so eventually the loan can be repaid while keeping enough cash in the policy to keep the policy in force for life. So if you didn't understand what I said, this is the way I understand it. These people can get huge amounts of coverage. We're talking about $10 million policies, $20 million policies to help settle their estate. And this is where it comes for big cases. They don't even have to pay for it. The bank's going to pay for it. The cash values is going to pay the bank back, but the policy's in force. How about that? That would grab one of these big fish's attention, I think. And guess what? The average commission on this was $225,000. That's the average commission. 225,000. I hope I'm getting your attention here. So it got my attention. You know what? If I make one of these sales, that $600 or $700 I spent to go to Chicago was well worth it. I think you guys would agree. Now let me tell you, the company that made the presentation on this, guess what they charged to do this? They charged $10,000 to do this for you, and you got to pay for that up front before you make the sale. 10 grand. Well, guess what? I went up there and I asked them, what carriers are you using? They said, we use two carriers for this. We use National Life Group and we use Allianz. Well, get you some, Jimmy, because that's who we already have. We have Allianz and we have National Life Group. I spent a half a day on the phone with National Life Group. They have a special department that handles this. We don't need those people to charge us 10 grand. National Life Group has a department. They totally handle this. They teach you how to structure it. They even have the third party lender available. They have several options to make this happen. Guys, I'm telling you, big bait, big fish. I hope I'm opening up some eyes out there. You just got to do the research. Going back to what Grant Cardone says, is that you have to be able to be willing to invest in yourself, and you have to be willing to educate yourself. You have to study, you have to read. Man, I go through a lot of books, I go through a lot of audiobooks, I spend time learning products. Now here's a new one I've never heard of before that I'm going to learn. And I tell you this to inspire you, to encourage you to do the same. Because you know what? You're in business for yourself. You're not getting a paycheck. You're not working by the hour. This is your business, and you need to invest the time to learn more about your business. You need to spend the time to learn more about how to market your business, and you need to spend the money to do it as well. So that's really all I have for you guys today. Joe, if you want to come back on and maybe add or say something to that, we'll give Joe a minute. I know he's driving. Well, I guess Joe is unable to come back on. So there's my next slide. It says, well, how's that big fish bait working for you? And then it has that guy that's really happy there. So folks, thank you for attending today's webinar. I hope you reach out to either Joe or myself. Let's get you going in the right direction. I do want to remind everybody we're about final expense. That's our bread and butter. That's going to pay the light bill. That's going to make your house payment. But we need to save that income so we can start exploring some of these other opportunities. And remember, that lead card gets you into the door. Once you're in the house, you might uncover some of these other opportunities that we talked about and make big commissions. I have to say, an average commission on a IRA or 401k rollover is about $8,000. That's not bad for a $29.75 lead. So with that, you guys have a great one. Good selling.